We are selling the above data center. After over 20 years in business, the owners are looking to retire. They're asking $2 million for the company. If you or someone you know is interested, we've posted the listing number here so you can apply. What does the company do? The data center for sale offers colocation services. Colocation or multi-tenant serve customers that want to host their servers off-site, off their business premises. They typically provide power, cooling, and also security, and they reduce the need to build out your own IT team in terms of cost. In terms of location, they're based in North Carolina in what is known as the data center corridor. But why data centers? Why would you want to buy one? According to McKinsey, AI alone is going to require $5.2 trillion of investment. As a result, the demand for data centers is through the roof for the next 5 years. Over the last 15 years, through the social media age, streaming and content, and now artificial intelligence, you've really seen a spike in data center demand. Data's up over 100 times in that time period. And demand for locations and leasing locations is up over 16 times in a short time period. Here are the company numbers from the listing. The asking price is $2 million. Their 3-year average cash flow is a little over $300,000. In terms of estimated EBITDA, after backing out $70,000 replacement costs, we get to $242,000. Note, for data centers, they only trade on EBITDA. They don't trade on SDE. Given the massive demand in AI and data centers, they're trading at a premium upmarket at 20 to 25 times EBITDA for their ask price. We've seen this multiples trickle down market to the small business world as well. While the typical SMB deal might go for 2 to 4 times SDE or 3 to 6 times EBITDA, data centers are trading for 8 to 9 times EBITDA in this segment. For a starting point, we've listed the business in the middle of that range after backing out the $70,000 of estimated replacement costs. Let's take a look at some company highlights. The first is low customer churn. After 20 years, the owners have great relationships with their customers, with multiple on for 10, 15 years. There isn't a lot of churn in their business, given the switching costs are high, and they provide a really good service offering. Second here is the estimated replacement costs to replace the facility. Given all the increase in inflation and building costs, this would cost a lot more to build in today's terms, given all the CapEx they put into the business over the years. And finally here, the growth in AI. They could see a significant jump in EBITDA next year as new AI servers come online. And now, even though it's our listing, here's some notable concerns. Number one, here's the multiple. Given all the crazy demand in AI, data centers are seen as a picks and shovel investment along that growth, meaning the multiple is premium to traditional SMB market. The second one we have here is industry knowledge. This can't be your typical business buyer. There's a full team in place, but it's a very technical in nature of business. So you want to have a background in IT or data centers to apply. The sellers agreed to a standard transition period. You want to just make sure as the buyer, you can keep up your end of the bargain so the customers have a smooth experience through the transition. That's today's review. Also one of our own listings. If you want to find a listing, here's the listing number above to search. And reminder, please do your own research. You can lose more than 100% of what you put in. These reviews are for informational and educational purposes only.